There was some big news in the housing market last week. The Federal Reserve just hit the pause button on hiking rates for the second time in a row. So after their first meeting in November, they spilled the beans for the federal funds rate is sticking between 5.25% and 5.5%. Now the big cheese over at the Fed is Jerome Powell, and he mentioned that they are super close to wrapping up this whole rate hiking saga. He even mentioned the higher long-term rates we've been seeing lately could do the trick in keeping inflation in check, as inflation has slowly been trending down. So they might not have to play the rate hike card again, or at least anytime soon. So in this video, I'll dive into what is making the headlines in the housing market and how this affects buyers and sellers, especially if you are thinking about purchasing a property in the next few months or selling your house. Okay, let's get into it. So despite some stubborn signs of inflation hanging around in the latest monthly data, Powell is feeling somewhat positive in inflation slowly trending down. He's also confident the overall price growth is on a downward path, even as the economy is strong and holding steady. But as there is always a but, the disclaimer is that if inflation starts to tick up a little bit in the next few months, they might have to bust out higher rates in the short term. And while the federal funds rate is not directly tied to mortgage rates, there is a correlation. When the Fed funds rate goes up, so do mortgage rates. And conversely, if they start to go down, so do mortgage rates go down. So since Jerome Powell said that they are going to put a pause on hiking rates, mortgage rates took a nosedive the very next day. The 30-year fixed rate mortgage ended up dropping almost 0.5 percentage, which is a lot, from around 8% down to 7.5%. And they say for every 1% in mortgage rates, whether they go up or they go down, there are 5 million buyers out there that either enter the market or leave. So with market rates going down by 0.5%, that's potentially 2.5 million buyers jumping back into the market. Hey, real quick, if you find this video helpful at all, please hit the like button, subscribe, and also reach out if you're thinking about moving in the next 12 months, or if you have any questions about the market. My details are in the description below. Home buyers are also shaking things up by looking at other options besides the usual 30-year fixed rate mortgage. They're also looking at adjustable rate mortgages, which means that their mortgage rate adjusts for the first 5 years, 7 years, 10 years at a lower rate than goes to the current mortgage rate at that time. So this is an option for buyers that don't plan on staying in the house long term, or they may be able to refinance before that adjustable rate goes up to market rate. And buyers are turning to adjustable rate mortgages. Last week, these type of loans spiked 10% last week, and they're also making up 10.7% of all loan applications. That's the highest they've been in nearly a year. So what this means for sellers is that there are potentially more buyers out there. And that is good news because recently there have been a number of price reductions on homes, more than in the last few months. So for buyers, this obviously means slightly better time to buy than it has been in the last few months. And also for sellers, it just means that you really need to be careful about pricing. If you price it over market value, then the buyers will not be coming out and giving you offers, and you might have to drop your price. So there you have it. If you found this video helpful at all, please remember to hit the like button, subscribe, and also if you have any questions about the market or you are thinking about moving in the next 12 months, please don't hesitate to reach out. My details are in the description below. And thank you for watching. And if you like this video, please check out these videos on my channel as well.